Hello, chart watchers, and welcome to this Thursday, April 18th, 2019 Market Watchers live show with your host, Erin Swenlin, and guest co-host today, Julius de Kempenaer. For those of you joining us for the first time today, welcome to the show. And for our regulars, of course, welcome back. Let's go ahead and take a quick look at the markets, and we will get the show started after that. All right, here we go. I'm looking at a 10-minute bar chart right now to give us an idea of what's going on currently intraday. As you can see, the Dow is up. A little bit of a volatile morning, but staying on the positive side so far the majority of the day. S&P 500, now notice the difference, staying under the zero line, finally getting into positive territory. Well, yesterday's close, not the zero line. NASDAQ is lower on the day currently. And we can see also S&P 400 started the day positive, again, very volatile. Now we're moving back up and into positive territory. Russell 2000, not quite there yet, still in negative territory, down 2.31 points. TSX, Canadian markets are up today, mostly consolidating sideways, so looking pretty good there. Treasury yields down quite a bit today, currently at 2.563%. The VIX is falling yet again, but you can see a kind of a volatile between 12 and 13, but currently we're closer to the 12 at 12.18. UUP, big gap up, moving sideways, down. We can see here with gold mostly unchanged. I do know it started the morning off pretty good. USO, lower on the day so far, down 3 cents, reading 13.25. And TLT, big gap up and moving sideways. All right, Julius, welcome back to Market Watchers Live. How are you doing this fine, I won't say morning because it's not quite morning for you.
No, it's actually exactly 6 p.m. for me right now, and thank you very much. I think my picture on the intro slide looks very, very good.
Yes, absolutely.
Yeah. So, no, I'm doing good. I'm glad to be back, and it's just you and me today, Erin.
I know. I'm very excited. I miss Tom. I always miss Tom, but I was very excited that you were coming in and you were going to co-host with me today. We're going to have a lot of fun, a lot of chit chat, more than likely. And looking forward to it. But
yeah, excellent. You know that actually this is the time where you should say that you're happy to be here and get rid of Tom and stuff like that.
I know, but Tom, and
no,
a
that's
lot
right.
of it just because of all the work he does in the back.
Absolutely. I'm thrilled to be in his footsteps, and I'll try to do my best to get up to his standards because the guy's doing a tremendous job every day.
Absolutely, he is. Okay, well, let's go ahead and look at our upcoming schedule, and I'll go over today's agenda, and then we'll get started with some technical news. And there you are. The stock market is closed tomorrow, so we all get a little bit of a day off. Pretty excited. Tom's workshop will be on Tuesday. I'm not sure what he's going to be doing it on, but it's always interesting, the subjects he picks. Danielle Shea will be here on Wednesday of next week. If you're into options trading, you will want to tune in on Wednesday, April 24th, when Danielle Shea comes in. All right, today's agenda, though, what are we going to do? Well, since we do have Julius here, he's going to be breaking it down with RRG. We'll be talking about a lot of RRG today. In fact, when we do the 10 and 10, I'm going to be giving him the symbols ahead of time. And he, from your request, so put them in the chat room, but get them in early, and he will run those on an RRG and pick a few that look good. And then finally, we're going to finish off with sector rotation. Do take the poll because we're interested in your thoughts on what you think of the current sector rotation models. So go ahead and do that. But right now, let's go ahead and get started with some technical news. And I do want to say that what I decided to do today was, rather than just read off the economic reports and the earnings, I would take you to those sites. So I'm going to go ahead and do that because a lot of people always ask, where in the heck, Tom, do you get all of your information? So I am going to show you exactly where you can get that. All right, so we're going to start off with the economic calendar. You can see that Econo Day is where you can go. And I'm going to back this up a little so you can see their homepage. So you'll get to the homepage. If you scroll all the way down, you could see upcoming US announcements and then click on full calendar. And here you are, right where I showed you. And so we can look at what reports have come out. You can go back and check those, but we can also see what is being reported today. Obviously, jobless claims, important one to look at. So you just click on the report and here you go. Not only does it tell you the highlights and give you the information about how important whatever the information is, but it tells you about the consensus outlook. It defines this for you. It also shows you back in time what these various economic readings are showing. So recommend you go and check these out. Right now, we'll just go through some of these numbers. So right now we can see that the new claims level, the consensus was going to be 206,000, and instead we ended up with 192,000. So that's how you can read it that way. So the new claims change, basically they're saying is down 5,000 from prior to revised. So that's that one. The Federal Business Outlook Survey, we'll go ahead and look at that one. And as you can see, the general business index, conditions index level, we're looking at consensus was 10.2, but we got an actual of 8.5. And what does that really mean? As I said, you can check with the highlights here. So I don't want to read it to you, but that is where you will find that information there. So that's what we're seeing for that. Retail sales, you can see there are quite a few today. So we're going to just look at a few of them. And I'm going to put together a summary slide of all of these that will be in the Market Watchers live recap. But like I said, I wanted to do this a little differently since it's me and not Tom. So I get to do what I'd like to do and show you. And I think teaching you is always the best. So I wanted to teach you about this. All right, retail sales, month-to-month change. Consensus was 0.8%. That was what was thought, but actual came in at 1.6%. So that's a nice increase there, actually double what everyone was thinking it would be. When you take the autos out, you're looking at a 1.2% change. With a 0.7% was the consensus. So that was what they were thinking it would be. And also autos and gas, as you can see, we got a little bit higher here on the sales at 0.9% versus 0.4%. So that's an interesting one to look at. Let's look at business inventories. Because like I said, we could be here all day looking at all of these and talking about all of them. But remember, econoday.com is where you can go find all of this information. So business inventories consensus was 0.3%, and it came in actual at 0.3%. So let's move along. 8-week, let's see, we won't do those. Leading indicators, we can look at that. And again, like I said, you can come right on back here and look. All right, so as you can see with our leading indicators, the consensus was 0.3%, but the actuals came in at 0.4%. So that's a 0.1% change. All right, and you can see there are plenty more that you can look at. And again, I like the fact you can go back as well and see the other reports if you want to know them, if you don't remember them. All right, next up, I'm going to look at the earnings calendar. And the earnings calendar, this is where Tom goes every morning before the show. And it's at Zacks.com. And the way you get to it, let's go to the homepage and I will show you. All right, so this is what you'll see when you come on here. Just go up to that earnings tab and click on earnings calendar. And then you're going to get right there. And then what Tom likes to do is he comes in here and sorts it by time. So that way he can look and see after market close, which ones are going to be coming in. I would say an important one would be Intuitive Surgical, ISRG, and you can see what the earnings reports are or what the expectations are. I think this is very interesting to look at these as well. Let's see a little bit. Schlumberger looks like an important one as well. And there we go. That's going to be before the market open. And there you go. You can even get the scorecard here. And that'll tell you even more. All righty. So that one is one that we would want to pay attention to. Schlumberger. Let's go ahead and get back over here. Okay, Union Pacific. Let's make sure these are organized here. There we go. Yes, Schlumberger, Philip Morris, and American Express. Those are before the market open tomorrow. And Honeywell, also Union Pacific, some of the big ones to consider on earnings. All right, so that's where you can get that information. It's not my thing. I don't normally do this. So he gave me all of these places to go. So like I said, I wanted to go ahead and show you those before we look at some other information. All right. I wanted to take you to the home page. And let's look at some more information as far as what's going on technically right now. I did show you the candle glance. But let's go ahead and here are the top 10 currently. We're looking as far as the NYSE. Let's look at most active for the S&P 500 right now. And there you are, most active. So Bank of America coming in most active, Pfizer, you can see AMD, General Electric, also your most active right now on the S&P 500. Percent up, who are the big winners right now? Right now, up over 8% United Rentals. And then we can also see Snap-on, big gap up, moving higher. And Union Pacific, remember we mentioned them in earnings, and on the earnings news, it looks like we've got a nice big gap up and continuing higher. All right, the next thing I want to look at, we're going to check out the market. Where are we going here? Market summary. All right. Here we go. So we can look at the major markets. I wanted to take a peek, obviously, at the S&P. This gives me a 6-month chart, so I can get a feel a little bit more for what's going on. You notice we still are just going to have, we're having trouble getting to those all-time highs. I think we finally hit that buying exhaustion, and we're starting to see that pullback. I'm going to show you very quickly my ultra short-term indicators to give you a feel for, and this is in my live chart list, all of these are. All right, ultra short-term indicators though, these are the climactic indicators. I pointed out in my blog yesterday, we've had all of these pokes at the upper Bollinger Band on the VIX, and remember I do invert my scale because overbought should be at the top and oversold should be at the bottom. I consider very low readings of the VIX as an overbought situation. Typically for the market, it's sentiment. And so when people are very bullish, you look the other direction for the reversal, because typically once everybody's on board, everybody's feeling bullish, that's when you're going to see those big time market reversals. So I watch the VIX very closely for short-term information and on sentiment. And right now, as you can see, we do have low readings. Remember, I showed you in the show opening, we were reading between 12 and 13. But yesterday we had gotten above, we punctured that upper Bollinger Band. And typically when I start seeing that kind of movement, you can also see a pullback here on the positive breadth was coming in as well. That to me is a sign of a buying exhaustion. So that's what I had called for yesterday, and it looks like we are starting to see some movement down. But of course, right now the S&P 500 currently is up slightly. So we may not get that negative close today, but we did get that move down where we set a new intraday low. So far today, we will have that. All right, Julius, I'm going to turn it over to you for upgrades and downgrades. I gave Julius the list of what I had found, and I asked him to put them all in an RRG and then look at a few that he thought were interesting. So I'm going to pass it to you, and here we go.
Yeah, this is an interesting exercise because I got a ton of ticker symbols on this RRG here, and the good thing is that you immediately see the ones that are standing out. By the way, I'm looking at a weekly RRG because that's sort of my go-to time frame. These are upgrades, downgrades. They come from analysts. They are usually institutionally based, so they probably have a longer term time frame as well. Mind you, I have no idea, by the way, and Erin, you can help me here and step in when I talk about a stock to tell me whether it's an upgrade or a downgrade, because I just have a ton of stocks in here and I have no idea
Yes, I
what
think
these
that,
analysts have been saying. However, the ones that stand out immediately are obviously TNXP here, and then COTY and Snap. So let's go with TNXP first, and I'll have my regular chart side by side, so TNXP, and I'm gonna compare everything with the S&P 500 or with SPY just to make things easy. Oh wow! Okay, I don't even want to go there.
oh, yeah.
This makes no sense at all. I don't know what it is, an upgrade or a downgrade, but please,
It is
guys,
an upgrade.
yeah, stay away from it. I'm not sure. I mean, no, I don't care who made that upgrade. Could be the investment bank that holds a ton of stock of this and wants to get rid of it. I don't know. I mean, well, this is a good thing why you should never rely on an RRG on its own, but always put it back to a normal chart. And what I would do next is actually go look at, what happened with this stock, like here in early 16, and then again in Q3, and then again here. So, I mean, I don't know.
Yeah, that's kind of an interesting one, isn't it?
Let's not waste any time on this one. So what I'm going to do here is I'm going to actually snap this off because it's, as you can see, it's distorting my picture. So I'm going to max this out or fit it actually. So now I have a lot better idea. So Snap, I mean, that's a real stock. That's trading and a lot of people are looking at it. So let's see.
Actually, it was Roth Capital, and they moved it from a neutral to a buy with a target of $4.
Snap?
No, that one. Too.
Oh, all right. Oh, okay. So I was going to say
Snap is a downgrade today.
All right. Well, it's from all these stocks on this RRG, it's still the strongest in terms of RS ratio. And it's got a pretty high reading, by the way. So 130. That's high. You don't see that very often. Probably because I had a massive move here. So this is 2.5%, 250% rally. Still super strong. It's losing some momentum. That's go away. It's losing some momentum, as you can see here, and that translates into the tail rolling over. It looks like as if it had its best course. And this is actually a pretty good example. Let's make a mental memo of this about something that I'm going to be talking about later. I think it's a little bit late to jump on board right now. So it could lose some value over the next few weeks. Let's quickly move on to COTY. Is that? Oh,
yep, that was a downgrade. Stifel downgraded it from a buy to a hold with a target at $12.
All right. Well, actually, if I look at this looks like a massive relative downtrend, and then it started to pick up somewhere at the beginning of the year, which is on the RRG when it crossed over into the leading quadrant from improving, and that happened over here. We had an initial rally moving sideways right now. The RS ratio level is relatively high. We're losing some of its momentum, but this downtrend here on the RS line seems to be turning around. So I'll keep a very good eye on it, because on the price chart, this downtrend's been broken. We could see some sort of a retracement here, but whenever a new higher low will be put into place on the price chart and RS ratio manages to hold up above 100 and put in a new low, then this could actually be a pretty interesting stock. So yeah, I would like to disagree. I'd like this. I'm not be a buyer here, but I'll definitely be a buyer when I see a new low coming in on the price chart.
Sure. It almost looks like a flag too, so.
Yeah, a little bit sideways, yeah. So COTY and Snap can go here. We'll zoom in. So what can we, how much time do we have left?
Oh, let's do one more.
A little bit more. Okay. So for your information, I'm now looking at GoGo and I'm looking at SJM because they are traveling in a northeastern direction, and that's what I like. and they have still some space to move. I mean, ECL also moves in that direction. It's probably a pretty good stock, but it's high on the RS ratio scale, where SJM is inside leading and still has a ton of space to move further to the right, and GoGo is probably a little bit more aggressive because it's still in improving. So let's play it safe here and see what SJM looks like.
And SJM, that was.
Ooh, I like that. I like that. Yeah, I mean, look at that.
Let's see who put that one in. SJM. Oh yeah, it is an upgrade. And it was upgraded by Morgan Stanley from an underweight to an equal weight, and they've moved their price target up to 117.
Well, we've reached that. It's 121 right now.
Yeah.
So, I mean, and they moved from what? From underperformed
underweight to equal weight. So sort of a sell to a buy, or I mean a sell to a neutral.
Yeah. I would say go buy it, go to overweight, because this looks pretty good. This is a massive relative downtrend. Has been underperforming for a long time, has been going sort of flat second half of 2018 into 2019. We're now picking up momentum. We'll see that all this negative relative strength has been shrugged off right now, and we see that both RRG lines are turning up at the same time. That's causing that RRG heading in the 45 degrees. That's when they move up at the same level, both RRG lines. And then if you look at the RS line, that seems to be getting out of a trough, out of a bottom. So it's like a range here. If that moves above this previous high, probably 0.43, 0.44, then we've certainly turned around this relative downtrend and started moving up on a relative basis. And we're, the way I look at it is that we're getting actually support from the price chart, where we have left the series of lower highs and lower lows. We went above a previous high, we went above the secondary previous high, and we're now looking for the next intermediate resistance level at 127.50. And then, I'm not going to say the sky is the limit because it's not going to all-time highs, but 135, all these old highs are new resistance areas, and by default they're new target areas. So I like the fact that we've been able to shrug off this downtrend. This selling at each time lower levels has been turned around. It's looking good. It's looking strong. Relative is looking good. So SJM is probably one of my favorites on this group right now.
All right, excellent. Well,
yeah,
it is time to move into your segment. So I'm gonna pretty much keep. You get to keep the screen. And
yep.
And I think that so today for your RRG, for your your workshop segment, basically.
Yeah, let me explain that, Erin, to the people who are watching. Normally, I would do breaking it down, and I would talk over either a sector or a bunch of ticker symbols, and give my opinion based on an RRG and working them side by side. But because Tom is not here, and I wanted to take a little bit of the workload off your shoulders, I prepared let's call it a mini workshop, where I want to talk a little bit about a couple of phenomena or things that people see happening on RRGs and that are often lead to questions, or are not immediately clear or not very intuitive. I'm not sure if we're going to make the full 30 minutes, but it gives us a little bit more time for the 10 and 10, and because it's my first time I do a 10 and 10, I might need 10 and 15 or 10 and 20.
Yes,
but I'll give myself a little bit of slack there.
Yes, we're going to concentrate on the education.
Yeah, let's give you a little bit of a background. It always helps, and the feedback that I get when I've been on the show is that people still like the explanatory part, the educational part of what they're actually looking at, because RRGs are now in the public space about 7 years old. They were first published in 2011 on Bloomberg, and StockCharts came on board in 2014. So that's already 5 years. We're pushing 4.5, 5 years already. But still, it's a new phenomenon. It's not mainstream. It's not like that everybody knows about it. There are even people who have never seen them and have no idea what they're looking at. So, and from what I've learned over the past few years, talking about RRG, because I had to make a real adjustment in my mindset, because I've been working with RRGs or the predecessors of RRG, when I was still working with institutional investors and working on the trading floor. And for me, it became sort of second nature. When you're sort of versed in something and you know what you're doing and you know what you're looking at, it becomes second nature, and you don't understand when other people are not at the same level. It's when you do a sports and you're I don't know, you're an expert in some sports and you know how to throw a ball or play soccer or football or baseball or whatever, and you play with someone who's never done it before, stuff that's second nature to you, like throwing a ball or hitting a ball, and someone else can't do it. It's very difficult to understand that someone else cannot do the same thing. But for me, it was the same with RRG. It was like, hey, don't you understand what you're looking at? And the truth is, no, they don't. So I had to scale back and shift back and go to a lower gear and continue to explain. And I've noticed that sometimes you explain something and you need to explain it a second time and a third time and a fourth time. So I'm now very comfortable doing that, and I'm not irritated anymore if no one understands that, because it takes a hell of a lot of time to bring something new to the marketplace. One of these things that come up in these discussions all the time is when a tail rotates on one side of an RRG. And in the last Chart Watchers newsletter, and of course, I assume that all the people who are watching right now are subscribers to the Chart Watchers newsletter. And if you're not, then please go ahead. It's chock full. We just shifted to a weekly newsletter instead of bi-weekly. So you got every week, every Saturday morning, you get a newsletter in your mailbox with contributions from all the people at StockCharts, all the commentators, and we take turns. So there is two teams. One team writes one week and the other team writes the other week. My turn was last week, so I'm off the hook for this weekend. And I wrote about these, what I call one-sided rotations. And the chart that you've got on your screen, that's actually the top chart of that article in that Chart Watchers newsletter, shows you the XLK sector rotating over time. By the way, that's using the feature on StockCharts using the animation. And you will see that that XLK sector has moved at the right-hand side of that RRG for a long time. So I'm going to bring that chart actually, let me put that here and bring it XLK, put it there. So now we've got 5 years of weekly rotation. I'm going to bring the price chart next to it. So that's right here. And we're going to match those two charts, because if we look on the price chart I'm looking at right now, you see that, well, I'm not going to pinpoint it for a week, but in Q1 2016, technology started to accelerate and move higher. And the same thing happened a little bit later with the relative line of the technology sector versus SPY. That started to accelerate and move higher. And that's when that uptrend, that relative uptrend, is being picked up by the RRG lines. So when both RRG lines are above 100, that sector moves into the leading quadrant. So let's look at the period somewhere in the middle of 2016. So I'm going to select the window here and scroll back to the period middle of 2016, somewhere here. So this is July 15. We put an inspection here. So July, oh, so that's 15. Hang on, too early. Sorry, July 15. I was right. 16 here, July 16. So that's about here. That's when this one is in lagging and moving up through improving and moving into leading. So we're now August 19th. Why is this not the same? It's the same. August 19th. Here, September was very hard to read. So we start moving into that leading quadrant. Move all the way there. Continue to the right. lose some momentum, and move back out. And we're looking here, January 13, 2017. So that's right here. I was here in August, moving up, losing it, and we're shaving that 100 line. So look at what happens here. We start moving up immediately, and that's when this one is sort of shaving off that 100 line. And then we pick up space again, and we move into the leading quadrant. And that happens here in the week of 17th of February. That's right here. And from there onwards, as you can see, that red RS ratio line never drops below 100 until late 2018. So if I go back to the RRG, I can scroll this all the way up, and you will see that when it loses relative momentum, like here, that's the situations where the RS momentum line loses value, and June 30 of 2017 drops below 100. That's right here. And that's when, on the RRG, the sector moves into the weakening quadrant and then curls up again. And that's what's happening here. And we do it again. We go up and we look down and we continue to rotate on the right-hand side. And you see smaller and bigger rotations taking place on the right-hand side. All the time, that technology sector remains on the right-hand side. And sometimes it goes through a little dip. And those are the little dips in relative momentum that you see here. Because the RRG lines, what they basically do is they measure trends in relative strength. So they picked up, quite correctly, this uptrend in relative strength. And the RS ratio line, as long as it's above 100, signals that there is an uptrend. When the RS momentum line drops below 100, it drags down the ratio line. That's the situations where you have a little pullback or a retracement in that relative trend, because these trends are not going in a straight line. They need, like a higher highs and higher lows, and that's what those rotations on the right-hand side mean. So here we arrived November 2nd, 2018. That is here, and you can see that we're now going to cross over into the lagging quadrant. So that technology dropped into weakening on August 3rd. That's here. Then the RS ratio line started to move lower. That's what you see because we're moving left on that axis. And we can't keep up, so there's no more rotation back up. And we move into lagging, and that's what's happening here. And then we go to a more serious relative decline into the end of 2018, and then we move up. And this was a bit of a surprise move. I just have to admit it. I had not expect this move to be, look at this. This is sort of a straight line up. I mean, who thought that? And we make our way, but then very rapidly, sometimes in Feb 18 here, we start to pick up relative momentum again. And we actually continue very strongly and move into leading already in March 22. So that's right here. And if we look at it right now, we're breaking to new relative highs and we're breaking to new absolute highs. There's absolutely no way for me to argue with the bullishness of this sector. So for the last quarter, I think that tech has been dominating the sector landscape right now. The other situation that I wanted to show you, because this is rotating on the right-hand side, if you look for a sector like, for example, XLB, if we look at that, and I bring that one up right here, that's been showing the reverse of this phenomena. And I'm going to look at the period that starts at the beginning of 2018, so somewhere in January, February 2018. And so we're here, March, January, February. We move into lagging at the beginning of Feb. So that's right here. And then that sector starts to move into lagging faster and faster. And please note the shorter tail, and then when it picks up, the tail gets longer. The length of these tails give you an indication of the power of that move, how fast it moves. And you see that XLB is picking up negative momentum and starting to move lower at the end of March. So that is right here, and you can see that that sort of coincides when the relative strength line breaks out of that narrow trading range and start to accelerate lower, and the RS ratio line starts to accelerate lower. That's what you see here, and we got some of these hiccups. And here we have the reverse of what we saw for technology. We see that these hiccups, and this is in June, at the beginning of June, and we see that what happens here, this is May, June, that is this little, well, it's not even a hiccup, it's a little sideways, it's a little pause in that downtrend, but it's just enough to push that RS momentum line above 100 and give it that little breather, that little break before it turns down again. And you see that when that RS momentum line turns down and crosses back below 100, that's when the RS momentum line has put in a new high and starts to move lower again. And if you look at that on the RRG chart, you will show that this is where it puts in its high and starts to move lower again and pick up speed to the downside and move lower. And that's when you move into that decline into the end of 2018. We start to, this is the last bit, make another one, and there we cross over into improving, and that's happening at the end of December, mid-December. That's right here, November, December, right here. And if that continues all the way up, but it doesn't make it, and now we're going, so we're going back into leg and then hooking back up. And this is the other thing that I want to discuss in a few minutes when I have a little bit more time, because this is a very sharp move. This is something that we need to discuss as well. The other one to wrap up these examples is that you can see this very often more pronounced for individual stocks. And the one that, when I thought about what stock, what example I was going to use, GE, General Electric, immediately sprung to my mind, because that's a stock that has gone through, well, what it's gone through, like 2 years, nobody made any money in GE, or maybe when you bought it right here, when you were a very, very good trader. But if you look at it from a relative perspective, and I'm comparing it to the S&P 500 and not to the industrial sector just for ease of comparison, but this one moved into the lagging quadrant in June 2016. So that was right here. That is this situation here. And now we're going to scroll it all the way back to right now, because we just moved into leading in March 2019. So let me play that. Let me show you how that works. If you click that animate button, it will actually play that rotation for you, and you can sit back and relax, take a sip of your coffee, and see that rotation play out and analyze that rotation and compare it to what's happening in the S&P 500. And if you have more tickers on the chart, you can compare that rotation with the rest of the universe that you're looking at. But see how far this GE stock moved to the left, and now we're back up. But you know, it moved to 75. As I told you, 130 was a very high number on the other one, but here 75. This is far away to the left. So these are very, very big, deep troughs. And we have just moved into leading, but we're doing that at a negative momentum. So momentum is already rolling over. So I am absolutely not convinced of this stock yet. If I look at if I go back to my normal chart and look at relative strength, you know, it looks as if this has just been putting in a new high, and it's being confirmed by negative relative momentum. So, you know, if this continues, this is a topish pattern to me. It's putting in a new lower high, yet another one. This is the, I don't know how many lower highs since July 2016. Not one single high has been higher than the previous high. So this is a huge pain trade. You know, there are still people who are willing to sell at lower levels. So, you know, unless you're a very short-term trader and want to take advantage of some short-term moves, I would stay away from this stock here. Where are we? Oh, I got plenty of time. Oh,
lots of time.
Yeah, loads of time, loads of time. All right, so this is one of the phenomena that I wanted to share with you. That is the what I call one-sided rotations. You may have noticed on my previous example on XLB, well, I noticed and I thought, hey, that's what I'm going to talk about in a minute. So I'm going to use this as an example. Fit it. There you go. Few of these situations that you don't really expect, because as you know, the theoretical theory behind RRGs is that it's a sequence of rotations through all 4 quadrants. And if you look at that blog that I just told you, then you have the typical rotational pattern here, working your way through all 4 quadrants, where the leading quadrant shows you the situations where the red are both RRG lines are above 100. That trend is up and that trend's being pushed higher by strong momentum. Then we lose momentum first, because momentum is always leading. Rate of change is a leading indicator. And that's when we drop into that weakening. And as I explained, you can have that rotation on the right and the left-hand side. Here we have the weak stuff where the relative trend is down, and it's being pushed down by negative momentum. And then you got, again, momentum as a leading indicator picking up. So that's the theory. And it rotates in a clockwise fashion. Now, the good news is that it is indeed always rotating in a clockwise fashion. The bad news is that it doesn't always show like that. And that's the next phenomena, the next thing that I want to discuss with you. Because if we look at that materials rotation here, you see that we move up and then we move left. So this is a sort of a weird hook. You see what I mean? You make it a little bit longer, increase the tail a little bit. There you go. So if we come in there, so it's like, this looks pretty good. So you rotate, you continue your clockwise rotation, and then all of a sudden you hook to the left. And that happens, well, not all the time, but it happens enough of the time to catch the eye of the keen observer, to query, what is that? What does that mean? What is it? What happens actually there? And we're actually seeing it to a lesser extent right now here. You see, if I zoom this in, you can probably see that very nicely. Fit. Let's see. Oh, all the way around. See that this is a weird hook. It's like goes in, rotates negatively. Here we rotate negatively, and all of a sudden, bam, we start pushing there. Well, the thing is that it is actually a clockwise rotation, but we're looking at a weekly chart right here. And this rotation is so fast that the weekly RRG is simply too slow to pick up that rotation and to display it as a clockwise rotation. So what you need to do to pick that up is switch to a daily time frame. So this is the last bit, so I'm okay here. So this is 7 weeks. Let me actually, you know what I'm going to do? I'm going to actually duplicate this chart here and put that side by side. So now they are the same. I'm going to make this the weekly. So here you have the weekly rotation with that super fast hook in it. Let's do 6 weeks, because every week has 5 days. And the maximum tail length on StockChart is 30 periods. So I'm going to extend this rotation here to 30 trading days. And what you need, both charts, your left and your right, the left is the weekly, the right is the daily. Both charts show the same period. They span the same period for XLB. But you see that on the daily, it has a very nice, solid, regular clockwise rotation. But it's too fast. It's just too fast for the weekly to pick up, and that's why it hooks. So if we analyze it now a little bit deeper, we go to that when it hooks. So this is March 29, and then it hooks April 5th. So let's zoom to March 29, and you can see the date of the endpoint here right below your chart. So March 29, you see here, March 29 is when the daily is sort of confirming that weekly pattern. This is the end. This is the week ending March 29, and this is March 28. Oh, hang on, wrong screen. March 29. So here you already see it picking up a little bit. And you see that if you compare the distances between the observations, that these weeks were pretty strong, and that last week, which is the last 5 periods from this one here, is a lot shorter. And you see that these observations are getting shorter together, and it's already, picking up a little bit of momentum, but it's not enough to show on the weekly. Now, if we then go to April 5, 1, 2, 3, 4, 5, look at that. Look at how that goes. Like, here we are. There's a little bit longer, a little bit longer. So we pick up, during that week, we start to increase momentum, and it goes in the right direction. But this is a very fast move, very fast-paced move. And the weekly just cannot keep up with that. So it's like hooks up to the right. And then it continues to go well on the daily. I think this is the end of that week, 15. So it's the second week here. 12, week of the 12th. So this is the end of that week. You see it rolling over on the daily already. Let's move here. Now this is another strong week, so we roll over a little bit, and then we need to move it up there. So this is already rolling up. So we're going to be seeing how that translates into the update of the weekly RRG on XLB. But the daily is on the right-hand side. It's losing a little bit of momentum. But this is how you can actually understand and explain these hooks. Now, the same thing goes if you see a hook on a daily. The problem is that we cannot show an intraday RRG. And I have to say not yet, but because we're working on giving you RRGs that can go into intraday time frames. So you can have an hourly or a 10-minute or whatever the default time frames intraday at StockCharts are, and you will be able to see even faster and shorter term rotations on an RRG. We need to go to 10 and 10, otherwise I will have to do 10 and 10. Erin, you need to give me those signals and take over for a couple of minutes until I have prepared that screen.
I will do just that. I am going to show the RRG of all of them while you put those 10 that are in right now that I just gave to you in a message, so you can start doing that. I'm going to go ahead and take the screen now. And let's look at the list of all of them. So here we have obviously some outliers here, and I did throw a few of those in there for you, Julius, as he's typing away. But the interesting part, I mean, we did have quite a few ETFs. I did pick one of those, the Vanguard Healthcare ETF. We're going to look in the comm services area. I picked, let's see, Matrix is an energy one. PCMI I picked for our discretionary. Allegiant we have as an industrial. As you can see, as far as requests go, we usually have technology pretty much out there. There's always a lot of those. So I did include a few of those as well. So it'll be interesting.
All right. Yeah, go on. Yeah, I'm ready.
Okay. Well, you don't sound that excited.
Yeah, I am. Yeah. Just I realized that I was just basically very rudely breaking into your conversation.
With myself. Okay. No, with everybody, I guguess.
No. That's
I do that all the time, break into a conversation with myself.
You got to be careful when you talk to yourself. You know that, right?
Yes. Sign of very brilliant people, by the way.
There's actually a couple of hundred people listening, so that's quite nice. Anyway, so here is the RRG of the 10 and 10. And I am just going to work my way through them. 18, all right, here we go, guys. TGTX. Everything against S&P 500. Weird chart. Big swings, very difficult to read for me. From a relative point of view, not super excited. It is in the leading quadrant, but it's already rolling. It's got the highest relative momentum. That's because of this very sudden and swift move. But it's already losing that relative momentum. So I am wondering whether the upside potential left is is worthwhile playing it, because there is quite a bit of risk crept into this stock right now, because we broke out, 5.5, 6, and we're now at 7.75. This relative trend is not super convincing, so I'm not very, very happy about this. It's a good stock from a relative point of view, but not the best out there probably. So that's one. Then PCMI, you probably know what I'm going to say right now. This one probably has run its course, and the only thing we need to check is whether it's strong enough to roll back up, or here it is, because it is at 135. So mind you, this is a very, very strong stock. It's very strong on relative strength scale. Interesting. It's the second time it's getting there. And relative strength is pushing against its previous highs. It broke out to new highs. Well, okay, so this level here is pretty crucial. So this area, I'd like to put it here, because I'm not super excited about these high-flying highs that are single observations. I'd like to mark my support where it's clustering. So in this case, that means somewhere 28.50, which is just below $1 below where we're trading right now, with relative strength at seriously high levels. And I wonder whether it can come back. So I don't like this. From a relative point of view, I think I would say goodbye to this one, because there is simply too much risk in it right now from a relative perspective. I think this one needs a breather. This is the highest level. We've seen it 3 times in the past 2 years, 1, 2, and now. And what you've seen is that, you go sideways a little bit higher, and then you go into a sort of a doldrum correction, and we've seen it here. If this one comes down, if RS ratio puts in a low above 100 and it coincides with a sort of support level on the price chart, I'll be happy to come back and have another look at it.
All righty.
PCMI. I'm zooming in every time, so that's cool. All right, here, this one, what's that? IRDM. IRDM. Much better, much better. This one actually rotated. Yeah, here you see it shoots off a little bit, but then it comes into weakening and moves back up. That's always nice. It's still moving higher on both axes, losing a little bit of momentum, but still up. That's good. It just broke to new highs above 24, so that 24 level should provide solid support in case of a decline, what we're seeing right now. Same thing happens with the RS line, where we broke to new highs, so I would expect 008 or 0082 to come in as support. But more importantly, both RRG lines are above 100 and rising. So I think this one still has potential, especially if we're going to put in a new low between 24 and 25. That would be a real buying opportunity for me to play this one go any higher. So that was IRDM. Okay, let's go for another good one. PYPL, is that it? PYPL. PayPal.
Yep.
I'm just that strange Dutchie that doesn't know all these ticker symbols on top of his head yet.
You have no idea. When I started this show, I didn't know industry groups. I wasn't familiar with any of those symbols.
Hey, you're cutting in my 10 and 10. I need to work.
All right.
So this is actually pretty cool. Yeah, this is solid. This is not, this is, what's happening here? All right. What did we just discuss? Weekly, and we got this hook up. We got this weird. It goes down, and then all of a sudden it hooks up. If I zoom in on this one, you see that weird hook up. I don't have time to go into the daily, but I can, I hope by now you can guess how this looks on a daily. It just rotates and starts moving in tandem. So this is actually strong, because it's doing exactly what it should do. It's giving you the second leg of that uptrend, or the third or the fourth, because this one had moved up early 2017, and it's sort of never really started in a relative downtrend. We picked up this one here. We moved into a short, well, it's very hard to see that weakness. RS momentum seems to bottom just above 100, pushing RS ratio higher. This is a strong stock. There's nothing else I can say about this. This is a strong stock. Let's get rid of it from the chart so we know what we need to do. Start from some negatives. So what's this? MTRX. MTRX.
Oil equipment and services industry.
MTRX. All right. Oh, okay. Every time when something is moving close to the benchmark, well, this is not super close, but it's close. You can see that these are very close to the benchmark here with the SPY. They're not super exciting. It's very hard to create any alpha, to extract any alpha from this. If you look at the chart, there's no real trend, there's no real pattern. Same goes for relative strength, very close. There's probably a ton of more charts out there that are worthwhile looking at. This can go either way. You can go to 16 as support, and then I wouldn't be able. I would stay away from this just because I don't know what it does. The relative strength suggests that it's weaker, which probably right, but I can see that this week is a strong week from a relative point of view because it picks up a little bit. This is nothing for me actually. I wouldn't know what to do. I'll wait and see for this one. That's the beauty of our business. If you don't have to, you just toss it away and you just don't look at it until it gives you a real signal.
Be picky.
Yeah. So this is a Canadian NTR Toronto. I am going to compare it to the NTR TO. Not completely nice because there is a currency component in here and it is a different benchmark, but it takes too long to switch to the Canadian benchmark. All right, from a relative perspective, it's starting to move down into lagging, which is not very good. If we zoom out on this, it'll probably show a downward break. And in the combination of pushing against resistance, which will be probably hard to break because I'm looking at this low and these highs here as resistance, it's pretty significant and it's long-standing. This suggests that it will be tough for NTR to break through resistance. So until it breaks above, let's play safe, 75, I'd be very careful with this one, especially from a relative point of view. Stay away until 75 breaks, but that will be translated into the tail on the RRG. It'll be definitely into improving or leading by then. So take this one off as well. Then we have VHT. VHT. Okay. Well, there is a reason why that's in the lagging quadrant. Because we just massively broke below important support on the relative strength line. That decline in momentum was picked up somewhere in November and it moved into lagging on the 11th of March. So the week of 11th of March, and that's right here, we moved into the lagging quadrant and we're getting our bonus payout right now as we are basically completing this toppish formation. I'd say we're heading to this support area around 150 where you have a lot of touch points. So that's probably a significant support area. If that one goes, then you'll see VHT going much further into lagging. So stay away from this one. This is a sell for me. So there you go. And then we have ALGT. Algo trading. No, not really. Giant travel. Whoa. Same story. Difficult price chart. It seems to have broken upward from its downtrend, but it's very wide range, so it's very hard to call these support and resistance levels unless you're trading very short term. I would say 120 and 140, but if I would be in your listener investor shoes, I'd say, hey, what kind of a range is that? 120, 140, there's a lot of money in between there. That's why I like to play, solid, good trends and good breaks. These are very close to the benchmark, difficult to read. Be careful, stay away. It's in weakening and heading lower on both axes. It's usually not the best sign that you can get. Mm-hmm. And then we've got WMGI. WMGI. Ooh. Well, this is a little bit more pronounced because, if you just look through your eyebrows and eyeball this one, this is a significant decline. It sort of could be on this trend line, but the relative trend is definitely broken. And it's just a matter of time, I think, before this one starts to crack down. So you see that momentum line didn't manage to actually pull off much higher. If we scroll that back a little bit, look at that. See, it's playing around with that 100 level. This playing around with that 100 level, that's what you see here. That's what then, when that RS momentum line is like smack on that 100 level, that's what you see when that tail just moves back and forth around 100. And then now it starts to pull away from that 100 level in the negative direction. So that's pulling that trend in relative strength down. This would be a very aggressive sell for me. I would not like to be long anymore this stock, and you could see this as a very aggressive short selling opportunity if you're a little bit more daring. And that brings us to go. This is a gamble. This is it looks like as if this is losing price momentum, starts to turn around. I'm going to zoom this one in because it's the last one. So I'm going to make this a little bit more because I like it because it's in that improving quadrant and hooking right. So we see that this is leveling off here and it starts to take off. It's very, very early because we're very, very close to the lows in relative strength. But I like the fact that it broke and immediately came back, and we're now working our way higher. And today, if we were able to close above that 5.12 level, that is another higher low in the making. And because this is such a low price stock, there is percentage-wise, there's a lot to gain because this one could go all the way to, let's say 864, 865. Sorry, I'm not reading right. 810 is a very strong resistance level, and there's probably some intermediary here around 6.5. But even that is more than one. That's more. So this, where my cursor right now is 6.5. That's $1.40. That's more than 20% upside for this stock. So this is a gamble. I wouldn't bet the farm on it, but it's a very nice gamble to actually play. And if you know what, we've got a very nice pair trade here. Put that against WGMI, and you have a very nice pair trade. That's my 10 in 10. Is that good enough?
All right. I think you did fabulous, and you didn't go that far over at all. So I think you did a wonderful job.
Yes.
So here are the symbols that Julius just went over. Since we didn't annotate them the same way that Tom does, they will not be in the Market Watchers Live. Actually, I'll probably annotate them for you. I'll put them up later today in the Market Watchers Live chart list. Just go to the Market Watchers Live blog and you'll find the link right there at the top. Before I get to the final market update, let's hear Arthur Hill discuss candles in the latest episode of Talking Technically.
Candlesticks, when should you use them and when should you ignore them? And this is a bigger part of technical analysis. A lot of times you need to ignore indicators and you need to know when to ignore indicators. So when the bigger trend is up, I ignore bearish candlestick patterns like a bearish engulfing, a shooting star, or a dark cloud cover. Instead, I only use candlestick patterns when the trend is up, and I only use bullish candlestick patterns then. Let's look at an example. Here we have Rockwell Automation, and we can see a pattern of higher highs and higher lows developing. And we get this pullback here into August, and we get a bullish engulfing. Now this is one I'm interested in because I think the bigger trend is up, and I think this bullish engulfing is signaling the start that the short-term downtrend there is going to reverse. And not only do I look at the candlestick reversal, I look for follow-through as well. And you can see we got follow-through with the resistance breakout, and then we got some good volume coming into the stock. And yes, sometimes I do use volume on individual stocks, but this is an example of when to use a bullish candlestick pattern.
All right, it is time for our final market update. As you can see, markets definitely rebounded after losing quite a bit here earlier in the morning. But we're starting to pull back, hit that intraday high and starting to pull back. At least that is what we're looking at for the Dow. Similar chart formation, just bring it down into negative territory for the S&P 500. But we did hit the intraday high in positive territory, but we are pulling back slightly. S&P 500 is still up 0.12%. NASDAQ, you know what? It was just about ready to go positive and it hit yesterday's close and is now turning back down. The NASDAQ itself is down 0.08%, not a whole lot. S&P 500 currently positive. It again hit an intraday low like most of the other indexes and is now proceeding higher. It did, in fact, beat its intraday high, but we are starting to pull back a little bit there as well. Russell 2000, mostly unchanged right now, did make up the losses earlier from the morning, came all the way back up. It is in negative territory right now, but only down 0.02%. TSX, Canadian markets, are up right now, definitely doing the best of the bunch, up almost 0.25%. Treasury yields down on the day, currently reading 2.558%. VIX is lower on the day. We're still, like I said, moving between that 12 and 13 area, which really in general is, I would consider complacency, comfort by market, by those investors that, we're starting to feel pretty good about it. And a reading of 12.31 is pretty low. UUP gap up and rising higher right now. Dollar looking very strong. And gold, honestly, not doing too bad because, usually we have that reverse correlation and you see the opposite occur for gold based on what the dollar is doing, but you can see gold is only down, GLD is down 6 cents. So really holding up to the winds of the dollar right now, even though it is in negative territory. USO down slightly at $13.26. And TLT, big gap up and now starting to make some new intraday highs, currently up 77 cents. That's all I have for the final market update. It is time to move on to our final segment, which is going to be about sector rotation. All right, but before I get started with that, I do want to show you my sector rotation model. And while I'm doing that, everybody go take the poll because we do want to see what you think about what's going on as far as the sector rotation model. Somebody, in the poll, it asks, what is the sector rotation model? And some of you don't know, and that's totally fine. That's why you watch the show. So right now, this is the sector rotation model. This is the classical one, because obviously we've separated out now quite a few of the sectors, with real estate and the telecom, etc. So, but here's the typical rotation that you normally see. And, right now, remember, as we moved out, moved into December, we started to hit, we were in a bear market. That's when you start to see staples, healthcare, and utilities do well. And we saw exactly that. If I pull up the sector summary, which I'll do very quickly after this. Then you start to look for the rotation out of these defensive areas, and you start looking for a movement towards the more aggressive sectors. And late contraction, which is the area that, we should be moving into at this point, we should start seeing financial services and consumer discretionary, starting to increase their hold. Technology as well, that's what we want to go into, the early expansion. These two are very aggressive sectors. So as we move through the rotation model, that's the stronger area. And then as you start moving more into your expansion, you've got transportation, your industrials, and then you're starting to see the capital goods, basic materials, all of those start to do well. And then when you get to the end of the expansion, with energy doing well, then you start to see, healthcare, consumer staples, utilities start doing better. So that's the sector rotation model. That's the classical one. Whether that is still relevant or not is really the question that we were going to talk about here on on this, but I want to show you the sector summary just really quickly and show you what we've got going right now as far as sector rotation. So real estate, while that's not on the classical model, that has been moved, considered, I would guess, Julius, at this point, somewhat on the defensive area of things. Utilities and staples, like I said, very defensive sectors leading. But what we wanted to see, like I said, we want to see financials start to perform better. Discretionary already is. Look at these scooter rankings. So you can also look back and see how, over the last month, which ones have been leading, and discretionary and technology, comm services. These are all more aggressive areas of the market. And now over the past month, they're the ones that have been taking this rally to the heights that it has seen. But I'm going to pass it to you, Julius, because, we'll take a look at that poll. And you can tell me what you think about what everybody's. I know you're doing some study to see if if that classical model is still, good.
Yeah, that's right. That's right.
So
there's a lot going on there.
Yeah. So we're going to look at the poll before we get started into, what's happening right now, and get an idea. So most people think it's going to be valid. It'll continue to be a valid model. I have actually said that I think it's going to change and shift. And I say that because, I feel like technology seems to always be in the mix. Even when we were struggling, technology was still, and discretionary, they still seem to show some strength. And that is what is kind of confusing, I guess, at this point.
Yeah, I can give you a little bit of background on this because that sector rotation model has been up forever. I mean, StockCharts is now 20 years old and 2 weeks, and I believe that sector rotation model was probably all 19 years.
Yeah.
And the first occurrence of the model that we are using was created by a guy named Sam Stovall. Sam Stovall is a very famous analyst in the US. Lo and behold, he's a fundamental analyst, but he keeps an open mind and he looks at markets and tries to relate it to investable universes. And he came up with this sector rotation model. And I had the pleasure to meet Sam Stovall in the past. I know him for a long time. So when I started working with StockCharts and we had this sector rotation model, and I started to do my sector work, and I wanted to actually, let's say, implement or overlay the RRG stuff with his sector rotation model. And that from time to time it works and from time to time it doesn't. And there are a couple of things that I want to say about this. The first thing is that very likely the weekly rotation is too fast for the economic rotation cycle that model looks at. Because mind you that these expansion and contractions are periods that are defined by the National Bureau of Economic Research. You can actually find them online. That bureau defines when a phase of expansion and a phase of contraction starts. Now, what Sam did, he took those numbers and he broke them down into 2 phases for the contraction and 3 for the expansion. What you already showed in your donut model or your circle model is what we have on the if you go on the page with the perf charts there. We have it in a sinus wave model, and that's how he presented it. And he positioned those sectors on that model to be able to get a gauge. And it's all based on the rationale or the assumption that the stock market leads the economic cycle by a certain period. Some people say 6 months, some people say 12. Let's put it at 9 or something like that. But at least it's a given sort of that the market leads the economic cycle, and that's what this model is trying to do. Now, when we had the real estate and the communication services sectors added to the mix, it basically put the whole sector classification, the whole thing upside down. So at StockCharts with a couple of analysts, we were thinking, so what can we do? And do we need to actually have another look at this? and that job landed on my shoulders. So over the past few months, I've been running spreadsheets that are like 3 feet wide and 6 feet long, using data going back to 1945 for a lot of sectors and a lot of industry groups, rolling them up into sector data, et cetera, et cetera, et cetera, trying to figure out whether that sector rotation model, as we know it, or as we have known it, is still valid. And I still need to do a ton of work on that, but my answer to the poll, which I came up with myself, is that I have the feeling right now, based on the stuff that I've seen in my spreadsheets and the data that I'm seeing, is I have the feeling that there has been a significant shift of these sectors over the past decade, maybe even 2 decades. Couple of things that I want to share with you, and you already mentioned it, Erin, that information technology is an outlier, but an outlier in a positive way. Information technology, for some reason, always seems to be in the mix. So it's very hard for me right now. It's very hard to put the proper position of the technology sector in relation to the economic cycle. There are a few that are very clearly visible. I mean, the healthcare, energy, industrials, they're sort of smack on. They're still where they should be. They're still where they've always been. So there's no problem there. Real estate is really difficult because there's very little data available. Through Sam, I'm getting a new data set that I'm going to do a lot of work on, and hopefully there is more real estate sector data there that I can use for this exercise. Another thing that caught my attention is the relationship between consumer discretionary and consumer staples. And my preliminary conclusion is that they do not always move in contrary. When they do move contrary, they give a very clear signal, and that's usually, as far as I can see right now, in the recession phases. But when there is an expansion, you have situations, especially in the middle expansion, as far as I can see now, that consumer staples and consumer discretionary are moving ahead at the same time. They're leading at the same time. So, with Tom together, I've always been looking at that XLY, XLP ratio to get a handle on whether the market's going up or down. I am starting to think that when both are going up at the same time, that's actually a pretty bullish thing for the market. So, so I have a thing there. And finally, another observation that sort of surprised me, I guess, is that financials. Financials is a very strong. It's a heavyweight sector. It's a big sector in the S&P 500. It's one of the heavyweights. And if I look at my data right now, what I've done is I've been ranking those sectors on performance and cumulative performance month to month per phase. Never ever in either phase, up or down, financials is in the top 3 or in the bottom 3. Financials is always in position 4 to 7, which is kind of surprising, because it means that financials is a sector, because despite the fact that it's such a big sector, it looks like it's a sector that's very difficult to use to create alpha. You probably need that sector. You need to have it when the market goes up because it's beta and it's such a big sector, so you need to have it. But it looks like, and still, this is very preliminary research. I have no very firm conclusions yet, but my conclusion now is that financials will be a very difficult sector to generate alpha, because it's always somewhere in the middle and it never massively deviates from the S&P 500 on average over a 1945 to 2019, so that's 65, some 80 years roughly. So that's what we're looking at right now. 1920. Let's look at the actual rotations that we have in place right now, and I'm going to take the screen back from you, Erin.
Yep, go for it.
Because I think I have about 7 minutes left before, 7, 8 minutes left before you need to take over. So here on the left-hand side is the actual up-to-date sector RRG for the SPDR ETFs in the S&P 500. Couple that I really need to look at with you, and I hope right now that you can actually pick them before I say them, but nevertheless, it's going to be technology, no surprise, and healthcare here on the bottom left. So let's start with technology. We can be probably very short on this one, because this one broke out to new highs on both price and relative. It's inside the leading quadrant. It's pushing massively higher on both scales. This looks very good, guys and girls. 75 should catch any decline as a support level. This is a super strong rally, and as I heard people say, it's very hard to argue with a chart that's moving to new all-time highs. So let's forget the negatives. This is a good one until proven otherwise. XLV is a different cookie. This one never managed to break out to new highs, and since late 2018 it started to nosedive basically. Momentum started to decline, and we see it breaking into the lagging quadrant already in weakening since early January, and then into weakening beginning of March right here when we're trading at 92. This is one of the ETFs that we just looked at with the what was it, upgrades, downgrades, right?
Indeed.
So this is a similar. I thought I've seen this picture, but that's right. So this is similar. So same answer here. Cluster of support in that 78, 80 area. But this does not look very good, massively lower highs, supply coming in. This one could go much lower there. What you can also see if you look at the, defensive, offensive rotations that we just discussed in terms of the sector rotation model, you see that utilities, which is, typically a defensive sector, and staples here, they're moving left, so they're getting out of favor. Same for real estate, getting out of favor, but real estate's still very high. This one is getting very close to crossing over. So this is where you would see something positive for the market as a whole, although I'm still super confused because we're so strong. I'd never expect that, but the charts are telling me otherwise. And the one, we can do one more, 23, yeah, we have time for that. The one more, basically, circling back to the discussions that we had on hooks earlier on, is for, and I'm going to scroll it one period back here, is for discretionary XLY. Because that came down here and then it hooks up. Let me isolate that one here. So you see that, how that discretionary sector rotated. And I'm going to bring that up here on the chart itself. And here you see another sector that is breaking to new highs. So if this is really an offensive sector, and I believe it still is, it's breaking to new highs, both on price and on relative. And we are just inside the leading quadrant, and we already have our second rotation. So we're like here, we have that hook. We never made it into weakening. Let me duplicate and show you that on the daily rotation, just to back up my call here. Where is XLY? Here you are. We're in that. So we're losing a little bit of momentum on the daily, but we are now the strongest on the RS ratio on the daily chart. So this needs maybe a little bit of correction, but only relative. I wouldn't even try to bet to play on it, because on the weekly this is actually looking very strong, and it seems ready to go. And with this, especially with this break here above 117.5, These are typically the situations where you can get an acceleration in your move. And the same thing goes with a break on your relative, where you can see an acceleration of the relative strength. And as you can see here, it's not uncommon for this one to move much higher. So, I'm pretty positive about discretionary and technology here. I think I'm going to leave it at this, Erin. It's 25. We need to wrap it up for us. So give you a little bit of time to wrap it up.
Yeah, well, it's been really great to have you on today. And I really took advantage of the fact that you were here today, of course, to obviously, talk about RRG. But I knew you were doing all this work in the background on sector rotation, and I really wanted to focus on education for today's show. And I think we hit the nail on the head. But if any of you are watching, we would certainly love to hear your thoughts on what we did today. Here is the summary. So we've started off, I showed you the classical sector rotation model. Then we discussed what some of the changes might be coming down the road as far as the research that Julius is doing. And then Julius just picked up what was going on currently for sector rotation. So again, it's been great having you here. I love the fact that if we need you at any time, you're always right there for us and letting us know, you're always willing to do whatever needs to be done.
Yeah, no worries. Let me just quickly chip in here because we have like 30, 40 seconds. There's a bunch of questions in the chat room I'm reading right now. I'd love to answer them, but there's zero time. So if you have put a question in there and you want me to answer it, feel free. My email address is under my blogs. I'm not going to reply within the hour, but I'm always replying. So feel free to put that question in my mailbox and you'll get an answer. Promise.
Yes. Julius is very interactive. I know that with, you were talking the entire time, so you really didn't have the time to stop
just
the
looking
chat
at
room. But I know I'm the same way. If anybody has questions, feel free to email. We just can't obviously guarantee that we can get back to you that quickly. And I also caveat that I don't answer emails where somebody says, "Hey, what does this look good? Is this stock good?" I'm not going to answer that kind of email. But I am at erinh@stockcharts.com. And yeah, Julius, you just gave your email.
It's Julius DK. So just look under my blogs, you'll find it. Just click on it. No problems.
No, excellent. And don't forget, here's what's been going on in the market right now. As you can see, it looks like intraday highs are being set right now, so far at least. We came up to that area for the Dow. You can see we're coming up to the same area above 2905 for the S&P. Interesting. I know Tom McCullen was talking about a lot of stuff going on and the thought that we've seen our highs and we're probably going to go sideways from here on out. I'm not sure I'm completely in agreement. All righty. Well, Julius, again, thanks for being here. And here's our upcoming schedule. And I do want to thank everybody for being here today with us. Remember to complete that survey as you exit, because I'd love to know what you thought about today's show, especially with me anchoring today. And as a quick reminder, Market Watchers Live does air 5 days a week, Monday through Fridays, from noon to 1:30 p.m. Eastern. And I'd like to wish everybody a great afternoon, and hopefully we'll see you back on Monday. Remember, no show tomorrow. Good Friday. The market is closed. Happy trading.